Over the weekend, the United States and Israel launched joint strikes on Iran. The operation, codenamed Epic Fury, killed Iran's supreme leader. Iran retaliated with missile strikes across the Gulf, and global prices surged overnight. This is the most significant geopolitical shock to hit markets in years. Here's what happened, what moved, and what traders should be watching. Oil moved first. WTI crude jumped more than 8% on Monday alone, and by Tuesday had surged past $77 a barrel. Brent broke above 83. The catalyst wasn't just the strikes, it was the Strait of Hormuz. Around 20% of the world's seaborne oil flows through that narrow waterway, and tanker traffic dropped roughly 70% as Iran warned ships not to enter. Equities whipsawed. The S&P 500 fell more than 2% on Tuesday before recovering after Trump said the US Navy would escort tankers through the strait. By Wednesday, markets rallied. The S&P gained 0.8% and the Nasdaq surged 1.3%, led by a tech and semiconductor bounce. Nvidia, Micron and AMD all posted strong gains. The dollar strengthened on safe haven flows, hitting its highest level in 5 weeks. Gold initially sold off in a historic liquidation before recovering, and defense stocks, Lockheed Martin, Northrop Grumman, surged 5 to 6%. Meanwhile, almost lost in the noise, Trump's 15% global tariff, the one he imposed under Section 122 after the Supreme Court struck down the old ones, officially takes effect this week. Treasury Secretary Bessent confirmed the implementation on Wednesday, so traders are now dealing with a shooting war and a new tariff regime at the same time. So what matters from here? Watch oil. If the Strait of Hormuz stays disrupted, supply pressure keeps prices elevated, which feeds straight into inflation expectations and rate cut timing. On Thursday, there were reports that Iranian operatives had reached out to the US to explore peace talks. If that gains traction, oil could pull back fast. Watch the dollar. It's been strengthening on safe haven demands, which puts pressure on the euro-US dollar and commodity currencies. And watch Friday's non-farm payrolls. A strong jobs number on top of an oil shock could push rate cut expectations even further out. I'm Lewis with WeNews. Subscribe so you never miss a Monday. See you next week.